Hello, traders. Welcome. It is now July 27th. Hope everyone is doing well. It is Thursday. The week goes by very quickly. And the main topic of conversation is going to be the Fed and yesterday's announcement. We have been talking about this on this channel. Some have disagreed with me for weeks now that we're going to see continued upside for the foreseeable future. But here it is again. The Federal Reserve has pushed interest rates to a 22-year high yesterday with another 25 bit move that brings the key rate between 525 and 550. But it's not enough for the central bank to declare victory on historic inflation just yet, right? It really looks like the markets are charting their next steps with CPI now down to 3% from over 9% seen last summer. And not much has changed from the new FOMC statement, while Jerome Powell did continue to voice caution in accompanying press conference time. So he did shift his tone, especially with regards to the outlook on the US economy. And the staff, economists from the central bank, now has noticeable slowdown in growth starting later this year in their forecast. But given the resilience of the economy recently, they are no longer forecasting a recession. So my base case is that we will be able to achieve inflation moving back to our target without any kind of real significant downturn that results in high levels of job losses that we've seen in the past. The federal funds rate is at a restrictive level now. So if we see inflation coming down credibly, sustainably, then we don't need to be restrictive at a restrictive level anymore. So you'd stop raising rates long before you got to 2% inflation, and you start cutting before you got to 2% inflation as well. So might see some cuts early next year. Following the news, Dow Jones pushed up its 13th consecutive advance, making it its biggest win streak since the 1980s. And if we close higher today, it would be the longest positive run since 1897. So the last U.S. GDP number for the second quarter will also be published this morning, 8:30 a.m. It's already passed. I believe it came out fairly good. I don't really know what the number is, but looking at this market, it looks pretty solid. So just the Nasdaq in terms of tech has kind of slower on this rally. The S&P is on a new high for the year. The Nasdaq hasn't quite joined it yet. We also had Meta earnings that came out last night. So let's see these Meta earnings here before we talk about the market and some of the other stuff. So Meta Platforms, they jumped 8% after hours Wednesday after posting Q2 earnings that easily beat expectations. So the report also echoed an online advertising recovery signaled by rival Google or Alphabet. Meta guided for Q3 revenue above estimates, as with other tech companies. Meta's earnings call focused largely on AI, naturally, as Zuckerberg previously said in 2023 that it would be the year of efficiency. Overall expenses in Q2 grew 10%, and investing group leader Livy Investment Research said that the results continue to show the company's progress in turning a corner. Though growth at a good price believes Meta may not rapidly catch up with its steep valuation. So far, so good. I think that tech does get some significant pullback into the fall months. I was expecting a little more into August, but right now it looks very hard to see any kind of pullback after this Fed's bullish move. Now let's talk about some of these levels on the S&P 500 and some of this trade plan. We are on new highs for the year in the S&P 500 futures. We broke the 4610 area and we flew higher about 25 points up to 46. 35-ish, right? Before we start to see some kind of pull down. Today, I want to watch to see if buyers step in on these pullbacks. I don't want to keep trying to fade this thing, trying to call a top. There's a huge level at 46.68. I thought we would get a little more downside press this week, but the bid sustaining these areas was impeccable, right? We couldn't even get down to 45, 50 or 60 this week. So as you know, when we start to increase the floors in the market and they get harder and harder to break, you'll see more shallow dip buying opportunities until we reach some kind of ceiling that seems to be very far away. So today in the S&P 500 futures, I'll be looking at 46.20 for potential pullbacks and 46.10 for potential pullbacks, right? 46.35 is a major resistance and so is 50, but I don't want to be trying to call tops in this market. So with that being said, let's open up our live trading room. I hope everyone has a great morning. Thank you all that joined me in the comments. Have a good morning. We'll do this again tomorrow to wrap up the week. And let's see what we get on today. Will this week try to sell a little? Doesn't look like it. So thank you guys.